Hey guys, welcome back. Another episode of the Full Subjects podcast after a little hiatus, a little time off. Really excited to get back in front of you guys and telling you what's going on in the market. This was a great catch up with Cole, talking about everything that's going on, everything that's been going on for the last month or two. So yeah, thanks for joining us for another episode. As always, guys, this podcast is for informational purposes only. It doesn't constitute any legal, tax, investment, financial, or any other advice. It's not intended to cause or induce breach of any existing agency agreement either. Let's hop into it. Ladies and gentlemen, we are back. It's been like a month and a half, probably, at least, maybe longer, maybe shorter. Nobody called to check in on us. It's kind of sad. Nobody missed us. No, all jokes aside, guys, we're back recording our first episode in probably a month and a bit, maybe longer. We had, it's funny, Cole and myself, we had recorded a couple episodes because we knew things were getting busy with, actually doing the real estate and mortgage stuff. And we had recorded a couple episodes basically to bank so that we could continue to get out an episode a week. I think Cole had went on holidays around that time as well. That was one of the reasons that we bulk recorded. And then we got busy doing the real estate and mortgage stuff. So we haven't had an episode out in a while, but we're back. We are recording. This one's going to be a shorter one, just kind of giving updates. Obviously some more recent breaking news as well. But yeah, it'll be 10 or 15 minute appetizer of an episode just to kind of get something out to you guys. And then might end up pivoting the schedule with the podcast a little bit. That's something that Cole and myself have been chatting about in the background. Perhaps maybe, an episode every 2 weeks, unless there's breaking news. That's something we're working on in the back end. Still want to get, news and updates and everything out to you guys, but just trying to really dial in what format's going to make the most sense for us going forward. So yeah, cool. How are things? What's going on?
I don't know, man. It's like you were joking offline here. I forget how to do this, but in all seriousness, good. Yeah, no, things are good. I'm excited to be back for sure. I think you're absolutely right. We're still refining how this is gonna look long term, and trying to bring some value and make sure that we're I guess making it work with the schedules as well. So, things are good. I'd say the market's in an interesting place right now. I think that's a good way to put it. We had some changes yesterday that'll impact first-time home buyers, which is obviously always a good thing. Well, not always a good thing, but in this case, I would say it's a good thing. We got a little bit of news today that I'll touch on, kind of give an idea of what might happen in the next rate announcement, because that's always a hot topic. And yeah, other than that, I think let's just talk about the market, kind of see where things are at. It's been a while since we've done a market update, of course. I think it's safe to say at this point we're in a buyer's market. I think we were more or less already there the last time we probably talked about this, but I think it's been established now for probably 3 or 4 straight months approximately, just based on sales to active listings ratio, but even just also what we're seeing. So Austin, why don't you talk a little bit about that, and maybe just touch on what that means. Like, what does that really mean for the buyers, and what does that mean for sellers?
Yeah, it's kind of interesting when we think back on the last 2 or 3 months. There's been a ton of stuff that's gone on. Take like a 30,000 foot view. Obviously, when we were chatting back in, I guess it would have been early April, end of March. Yeah, we were talking about election coming up, uncertainty, tariffs. Tariffs are off. Tariffs are back. Tariffs are off. Tariffs are back again. Tariffs are off as of yesterday. Apparently, it's unlawful. But they might be back in some other capacity. Anyway, that's me kind of being sarcastic about it. But that light switch is turned off and on a couple times. At that time, we were thinking that things were a little bit quieter because of uncertainty with economy, politics, people wanting to know, just having some certainty of what's going on before making a decision. Sometimes people can get kind of, decision-making paralysis from, other things that are going on, current events, people just wanting to understand or have more things be certain. And since then, market wise, we're still seeing a lot of listings. I definitely felt in the last couple weeks in particular showing activity is up. You're definitely seeing a lot more first-time home buyers get off the sidelines and say, "Hey, look, like, rates are at a really decent point. Prices are coming down. There's a lot to choose from." I showed some clients like 14 different options this week. They were looking to get into something, so tons of inventory, tons of choice, and ultimately, as opposed to just picking one that kind of worked for them, they were able to compare multiple products and really dial in like, hey, this place is perfect for us. So that's been really great on the buyer end. On the seller end, it's kind of a balance of not limiting expectations, but just understanding the reality of the market we're in and kind of setting expectations. And just everybody's situation is different. There's always opportunities in the market. There's things that are going to be more ideal for some groups as opposed to for other people. It might make the most sense just to wait, whether that's a year or two, depending on what they plan on doing. And that's why you have conversations with people like myself and Cole and try and put together an effective plan and timeline. And what are you seeing on the mortgage end, Cole?
There's definitely buyers that are still looking. I would say it's slowed down a little bit in the sense that there's still a lot of uncertainty in terms of what's going to happen over the next 6 months to a year in terms of the economy. There's jobless rate is up, so there's some uncertainty there. I think a lot of people are looking for a bit more stability before they make that choice. In terms of interest rates, I don't know if interest rates are going to shift that much. I think we're kind of in a spot where things might bounce around a bit, but I think that 4% mark is kind of where you're going to hover for a bit. Like, obviously things can change due to like more sudden circumstances, but I would say sudden events, that's a better way to put it for sure. But ultimately I would say things aren't going to change probably that much. I kind of alluded to this earlier, but we'll touch a little bit more on where I think rates are going to go, at least from the variable side. So is the Bank of Canada going to make any more cuts? We'll touch on that in a minute here. But I would say like there's people that are looking, but they're taking their time because they can. I think there's still some sellers that are a bit stubborn in terms of they're like, hey, this is the price I want to take. I'm not taking less. And then buyers are like, well, you're actually probably worth this. And because of that, maybe things aren't progressing. I think that's happening in some cases for sure. But something's going to give here, probably one way or the other. I do expect that things won't pick up over the summer because the summer in general, I would say, is typically
quieter,
lower. I mean, we've seen summers where that's not the case, but I can't see anything happening in the next month that's going to change the current trajectory we're on. And then obviously we hope kind of for a nice little fall push before winter comes around. But I would say right now my biggest thing is making sure people that are coming up for renewal and people that have opportunities to lower their overall debt payments, so consolidate some of that debt. That's really where the opportunities are for myself. And then just educating people that are looking to get into the market and explaining to them what the current situation is, where things might go, where things might... It's all just projection, but I mean, where things might end up. I think that's pretty much it.
Yeah, I think one of the things that's very, very well said. Yeah, there's some uncertainty, but 2-3 years ago, we were praying for, a market like this. Mm-hmm. And obviously, like I mentioned before, every market has different benefits for different people. It's very cliche, but I remember when, 2020, 2021, everybody was like, or a lot of like the public perception was, oh yeah, it must be nice, everything's selling. And it's like, yeah, those people, those people do need to buy something as well. You know what I mean? Yeah. So it's easier said than done. And, right now there's definitely, I think it's fair to say, some frustrated sellers. You're doing your CMAs for people. You have an idea of what a place is worth, and showings are slower, right? Because there's so much more to choose from. You have more options. It's definitely different, and there's some people that definitely want to move, and I think you're starting to see. I mean, you've definitely seen more price adjustments, more drop prices, and I think the stats show that too, for sure. So, that's kind of what I have to add there.
Yeah, no, I think that's absolutely true. So let's touch on I guess let's call it breaking news, not really breaking news. So the first one is something that came out on Wednesday, and that has to do with first-time homebuyers. So what they're planning to do, actually, I think it's already in effect. So what they've done is they've now, eliminate's not the right word, they're now offering a rebate for GST on newly built homes for first-time homebuyers, which if you don't know, what's really great about this is typically if you purchase a home brand new, you have to pay 5% GST because that's the law. Let's just leave it at that. What they're doing now is if you purchase a newly built home for up to $1 million, you can get a rebate. Why this is important to use the word rebate is because that's exactly what it is, and it doesn't mean you don't have to pay that money. You do have to pay that money, and then you can get that money back. So you do have to have that money available to pay. So I mean, on $1 million, you're looking at 50 grand, which is a lot of money, but you get that money back. So that's awesome. I think that's supposed to help in two ways. It's supposed to help first-time home buyers, but it's also supposed to help the pre-sale newly built market right now, which in some cases we're seeing some difficulties for people completing on their mortgages, and just there's a lot of inventory there that some people maybe aren't scooping up. One thing that's really interesting about that, and I was reading about this yesterday, I haven't 100% confirmed this, but like 99% confirmed this, is that what happens if you entered an agreement to purchase before this came into effect? So let's say you entered an agreement last month and your place doesn't complete till, I don't know, the end of 2025. Like it could be longer than that. Let's just give that as an example. Based on what I read, you don't qualify for the rebate. You had to have entered into that contract after the new policy went into effect. So honestly, that kind of sucks because like I mean, I'm not going to say any names, but like I have clients that have purchased newly built homes. I was like, oh, I'm going to email them, be like, guys, check this out. This is amazing. But I was like, okay, hold on. Before I jump the gun here, make sure I check to see if that's actually true. And I did. And based on what I read, that's not true. You do have to have purchased it after it went into effect, which seems a little odd to me because that kind of defeats part of the purpose of this. You know what I mean? Like if you're had already bought something and you're not closing for a year and you're a first-time home buyer, and then by that time maybe you're struggling to be able to make that affordable, this would have been great for them, but they entered the contract before the rebate came into effect.
I think one of the other unintended consequences piggybacking off of that is now all of the people that maybe did purchase brand new prior to, I mean, it's not like easy math, but technically they've kind of taken a 5% hit on their property as well, right? So if you were paying, if you were paying $850 including GST as that number, now all of a sudden that GST is a rebate or cash back or however.
Right.
I'm probably not describing this the most articulate way, but now all of a sudden that 5% disappears in some capacity. Now technically your place is worth less, right?
Yeah, that's a very simple way to look at it, but you're right. And I'm curious, I need to do more research on this in terms of what happens if you assign that contract. Does that mean it's does that mean
it's still you think it's still applicable because then
I would think
because you'd be assigning it to somebody else that might not be a first-time home buyer, right?
Well, yeah, and also like if the contract was entered before, you're only assigning the contract. You're not creating a new contract, right? So as far as I know, based on what I read, that's just what it is. Like you don't get the rebate. So I guess what it's trying to do is it's trying to incentivize homes that haven't already entered into a contract that are newly built to get that rebate. But what about all the people that are struggling right now that are trying to complete on their purchase? That extra 5% could go a long way. Maybe that's more of a down payment so that they can qualify for that mortgage. Maybe that's, I mean, it's tens of thousands of dollars in most cases, right? Like that's a lot of money that people are paying, and you don't get anything for GST. It's tax, right? Like there's no benefit to that other than it's a cost that you have to pay. So yeah, I mean, it sucks, but I mean, looking on the more positive side, if I'm a first-time home buyer now and I've got an option between a newly built place and a not newly built place, that newly built place is pretty intriguing, right? Like, because now I'm paying list price, no GST, and I'm not paying property transfer tax as long as it's under a certain value. I can go 30 years on that mortgage. It's brand new. I'm going to get my warranties on that. Like,
what would you
do? Like,
definitely makes it a more interesting conversation, because especially when you're like, one of the conversations that I'll typically have with people when they're purchasing is like, hey, if you buy brand new, price is going to be higher, but you probably don't have to worry as much about things like levies and maintenance and all this other stuff, because everything's turnkey brand new.
Yeah.
As opposed to, comparing this, if you buy a used car, yeah, you might be on the hook for tires or brakes or, maintenance or that other stuff, but that number isn't going to be the, brand new price, right? So you kind of end up balancing that stuff out. So yeah, I mean, it definitely makes it more of a conversation, for sure. What this also kind of reminds me of too, a little bit, if we can relate this to something else that happened. I remember when the PTT change happened for the under 500K to basically having a credit. I remember it was a mad dash because they gave us, I feel like, a month or two or something like that. Or
everybody was trying to close, right? They were trying to close before that deadline or whatever.
Close after. So, right. All of a sudden, if you shifted your, closing date by 2 or 3 days, then all of a sudden it was, oh, hey, I can save $8,000 in my pocket. You know what I mean? So
huge.
And that was huge. And I remember at the time, I feel like some sellers in some cases were asking for, some of that money basically to offset that. If they were saving 8, hey, can we be part of that so everybody wins? So, so sure. they'd like adjust, they'd adjust the date, but then you'd maybe credit them or something like that. I remember at the time I didn't have any that were super close that anybody had asked to change, but I did have people that had moved like 2 months before and were like, hey, where can I get my $8,000? Sorry.
Yeah. Where do
help you?
Where do I apply for my rebate? When that's not what that is in this case. And I mean, it's interesting. Like, again, I'm not 100% sure, like based on what I read, that's how I understand it. I thought they might put in some sort of provision where it's like, if you entered into a contract in 2025, for example, by, you know what I mean, January 1st onward, then yeah, you can get the rebate or something. Like maybe they backdated it a little bit. But yeah, I don't know. That seems a bit like it is a good thing, but I think it's missing a bigger opportunity. But maybe there's a reason for that, because maybe they're already banking on getting that money. Right? They're like, oh, we're already going to get the 5% GST on all these homes that have already sold. And if I'm not mistaken, you don't have to pay that GST up front, right? It's just in your final cost when you finish, right? Yeah.
Typically, and you're probably better for this, but yeah, GST can go into the mortgage as opposed to PTT is up front, right?
Yeah, that's right. And typically, like with newly built, usually I'll have like a 5% down payment up front. There'll maybe be another 5% somewhere along the line. 10%, from what I've seen, is usually the minimum that they're asking for. Developers want on hand, and then from there, it's maybe they'll ask for more. I'm sure you've seen cases where maybe there's more than 10% required. I can't speak 100% to that, but and then
depends on the project, but yeah.
Yeah, exactly. So then at that point, then it's about getting the mortgage. Are you going to put the 20% down? Are you not? And you kind of go from there. And then, as you mentioned, you can absolutely add the GST as part of your overall mortgage cost. But yeah, like that's a good thing overall. But I think there was some more opportunity there that maybe was missed. Now, on the other side of things, so today they announced basically the strength of the economy for the first quarter of 2025, so GDP. It came in at 2.2%, which is a lot stronger than was expected from what I understand. Now, that's not a bad thing. I mean, it means the economy's doing better than expected, but it means that there's less of a likelihood that we're going to see a rate drop. I believe next rate drop is this coming Wednesday. Now, obviously, rate drops can be good in terms of stimulating the market. Like usually you'll get a little bit of an influx of activity when rate drops happen, just because more people tend to shift their mindset a little bit. I think because we've seen rates drop previously, you won't see that. If they do drop rates, you won't see like a massive influx, obviously, at this point, but you might see a little bit of sentiment change. So looking like that might not happen next week. Looks like they might still hold steady, but especially with the other uncertainties going on. But we'll see. Yeah. I don't know.
Very, very well put. Anything else you want to touch on here? We're just coming up on 20 minutes.
No, I think that's good. I think it's good to get back into it. As Austin said, we're still working out some of the finer details here, but we're definitely back. We're not gone, not gone forever.
We're back, baby.
Can't get rid of us that easily. Just took a little bit of a break there. Yeah, we'll just keep try to bring valuable information, and we'll figure out the schedule as we go.
Sounds good. Awesome. Well, thank you guys for joining us for another episode, and we'll chat with you again next week.